Now, to dive into the latest market moves is Todd Walsh. He is the CEO of Alpha Cubed Investments. He is joining us live now, all the way from California on the West Coast. Thank you for waking up so early, Todd.
Hi, Trinity. Thanks for having me on. It's always good to be here at the opening bell.
Exactly. And the U.S. stock market just opened, as you just saw, for trade today, with investors focusing on trade policy. That is in focus. How do you see trade relations impacting market sentiment right now in the short term?
Well, I was going to say, welcome to Tariff Tuesday, right?
Yeah.
More scary news. Of course, the market hates instability. We know that. But this is the time when our investors need us. We work with retail high net worth, and we need to be there for them when this instability happens. We saw that big run up late last year on the business friendly administration, and we've been getting one scary news item after another. And we've put a playbook together to help our investors navigate what we expected to be a consolidating and scary year. And it's certainly playing out that way.
And there's been a lot of attention on soft economic data ahead of Friday's jobs report as well. So how should investors be interpreting these data points right now? And what's your outlook for employment trends?
What we're cautioning investors to do is to sort of run from one side of the boat to the other. We're getting a lot of scary news items. We're integrating a new administration, but it's not a static situation. We're confident that while we expect to see some more softening on the economic data front, the Fed is probably going to step in sooner than is currently expected to support the markets and provide some backing to this integration process that we're seeing. And we're dealing with, today is a great example with the volatility we're seeing on the tariffs.
And with the White House as well unveiling a $100 billion chip deal, what kind of impact do you expect this to have on the tech sector and the broader market?
This goes back to our basic playbook for 2025. We had a huge year in 2023, a huge year in 2024, notwithstanding all of this policy change and new administration information we're seeing. It's logical to expect a consolidating market. A consolidating market means volatility, right? So we want to step away from the scary news boomerangs, we call them, and look at the big picture trends that are going on. AI is going to continue to get built out. We're going to be talking about it for a long while. Doesn't mean it needs to go straight up to the sky, but use volatility to pick up some of the names you might be underrepresented in through the course of 2025. And then look at the dividend value trade. The Fed wants to lower rates. The new administration wants to lower rates. And over time, especially if we see weaker data, that's probably going to be what ends up happening. And it's going to go a long way to contributing to returns in what we continue to expect to be a choppy year.
And trade policy continues to be a focal point. Do you see any potential risks from ongoing trade tensions that could shake investor confidence? We just saw the news roll out, 25% on Canadian Mexican imports, 10% on Chinese goods. What do you anticipate?
I don't think anybody doesn't see any risk right now. The interesting component there, Trinity, is that we haven't seen any of our trade partners kind of dig in their heels and really push back. We've got some tariffs coming from Canada, Mexico potentially, and China at this point. We're going to have to see how this plays out. And what we're cautioning investors is not to capture the information of the day and to project out infinitely out into the future. I think you're going to see changes in all of the policies that come out. But one of the big risks there is that one of our major trading partners really digs in their heels and escalates this trade war. And of course, that's what everyone's afraid of. We don't think that's the way it's going to play out over the long term, but we need to have some caution. And that's why we're recommending kind of stepping into these markets lightly as you build out your portfolio this year, because we don't think we're done with the volatility at all.
I know you made a point to signal caution, but is there any buying opportunities right now for long-term investors in our current economic landscape?
You've got companies like Microsoft, Amazon, Alphabet, Google, down 10, 20+%. The AI story is going to continue to get built out. And for clients and investors who went in underrepresented in these names, it's a good year to go through and can kind of slowly add dollar cost average into those names. It's interesting to note that in addition to building out the AI ecosystem, which we think is a longer term megatrend, those three companies came out in the last 2-3 months and weeks and announced developments and advancements in quantum computing as well. So the innovation is going to continue on a lot of different fronts, autonomous driving, things like that. We can't lose sight of the innovation wave that we're living through right now. We just can't get too excited and run in and buy everything all at once. We need to be measured this year.
Todd, we have about 30 seconds left, but as we see a mix of market uncertainty and possibility of, strong job growth, how are you positioning your company when it comes to investment portfolios for the next few months?
That playbook we laid out is exactly how we are positioning the company. We're trying to do some trims of some of the highly valued names that we saw earlier this year. Palantir would be sort of the poster child for highly valued tech names. Use the volatility to take what the market gives us and build out the core of that dividend value trade, which we think when we get to the end of the year is going to be a real big winner for us this year. So a combination of adding to tech where we're underrepresented and adding to that dividend value trade to get those dividends coming in and some capital gains as well.
Todd Walsh, CEO of Alpha Cubed Investments, thank you for joining us.
Thanks, Trinity.